Good morning, good evening, good afternoon, depending on where you are in this world. This is Agent Lee with an update for Bitcoin. So last night's update or midday update showed that price was wandering, looking for directional resolution. And this sideways movement or triangle movement was essentially channeling until we finally got the directional resolution. So this ascending right triangle has resolved to the upside. Good. Okay. Now, what I would like to present is again iterate the potential for this to be a left shoulder and this to be the head formation of a potential head and shoulders top. And that means that we could probably get the right shoulder forming here. With the neckline drawn as such. So if we get price action that is something like this, then we know that the clarity of this pattern will be pretty uncanny. And the key point of this pattern is that it has two requirements before you really should be acting on it. The first requirement is that the pattern needs to complete. So the right shoulder still needs to complete. And that could take until, let's say, mid-May. And then the second, and this is very important, is to await the decisive break of the neckline. Why? This whole thing can fail. It can become invalidated by going like this. So this would be an invalid head and shoulders top. These patterns are not 100% perfect in their predictabilities. So those two requirements must be upheld. This right shoulder must complete, and then the price must decisively break the neckline. So this is to keep into awareness in that if you see a lot of overlapping in price action, that's no way an impulse direction. Okay, and it means that it's not an impulsive direction for probable higher highs, but a turn down towards the neckline, completing the right shoulder. The count to look out for, and this was presented also, is if we see this going, we can say wave 1 was here, a WXY2, and this break of this ascending right triangle brings it to, let's say here, 3, 4, and 5. I'm sorry. Like so. And it impulses. Let's say it makes new highs into the mid-May for this 5,800, maybe 6K zone. If this is what it plays out to, then we had wave 3 here and the WXY for the wave 4 and this was 1, 2, and this will be the 3 of the 5, wave 5. So 3 WXY 4. Then we can say this was a leading triangle-ish 1, 2, 3, 4 with an overlap 5. So 1, 2, very sharp ABC. And then this will be wave 3 of 3 right here. The fact that price is going vertical right now is nice in that it confirms to the fact that this is probably 1, 2, 3, 4, and 5 potential. So if we zoom out, this is 3 WXY 4. Okay? Okay, fixed. So 3, 4, and then we'll get the 1, 2, 3, 4, and 5 of the final wave 5. That'll take us to 6K, 6.2K. So this is the bullish scenario. This would negate anything below, going down to the 4,000s. However, if you have been holding since the lower 3Ks, and you've been waiting to take profits, any valley above, let's say, 53.73, I would take a little off the table, right here. So I would take some off the table. Any new higher high, I'd take a good chunk off the table. So let's say 10%. Good chunk will be 30%. So I'm now 60% in. Once wave 3 completes, for any new high or high above the 3, I'll almost be completely out on the trailing stop. Or you can break it into thirds, however you want. So this is the bullish scenario into mid-May. May 15th, 14th, even the 19th, I don't know. What I would, however, be very aware of is this potential. Okay? So if this goes to somewhere in the 52.73, you'll be out 10%, 30%, or whatever you choose. Raising cash so that if in the event this happens, then if it turns lower low, I'd put a stop right below the neckline to get me out fully on that trade, because this head and shoulders will take it lower low to this head and shoulders will be seeing that wave 5 is already in 3, 4, and 5. So this will be my alternate bullish primary. I've consistently thought that we'll go to 6K or 6.2K or maybe even slightly more than that. So would say to wave 5 is almost always the profit taking wave. Okay? So as soon as we get past wave 3, take some. New highs, take some. A good chunk. Okay? Once you can count your 1, 2, 3, 4 is done, and then 5, another new high, I'm out. And that's the way I play it usually, unless this is not how it plays out, and we go to this. There is a potential that if this cycle was elastic and extended, and we have a new cycle coming, that new cycle will dictate and support this scenario. Are we out of the woods of the lower lows to the 4.4, 4.7K? No. Not until we can get this completely out of the picture. How do we get this out of the picture for the head and shoulders top? Price needs to make a higher high into this wave 3. Second alternate. This is still on the table. The zigzag. ABC. Okay? We still have, unless we still have the A, B, and C. Now, unless this continues, it'll probably be a flame out. Okay? And that flame out will show as a long wick. So far, it already has a half a wick. And usually, that's how the flame outs, like here, represent a period of temporary burnout. So if we have a genuine breakout of this ascending right triangle, price needs to do what? It needs to stay above this horizontal green line, a blue line. If it comes back below it, this is potentially in play along with this as well. So, except the right shoulder will be much smaller than the left shoulder, which won't give a very good symmetry, but that's okay. Primary bullish, with the points that I would be taking exits to. First alternate, second alternate, and I've given the conditions. And you can't just say, I'm going to stick with this no matter what, and it's going to be right. If that's how you think, only in a single plane direction, you're going to bring your account to zero. You have to ask always, constantly, as many what-if scenario questions possible. So we have this, this, and this, and the overarching is what? It's showing that we have a slap down coming. Whether it comes now, based on this, or rather this, whether the slap down is coming right now, or the slap down is going to come after this wave 5 is placed. So you know the exit strategy for this to take your profits that I would do for this scenario. Stop point at below the neckline. Once if price comes back inside and this support breaks, stop would be here. So you could have two different stop levels. And the overall pattern fractal play out still remains as is. If you look at it from this weekly perspective, nothing has changed. If not anything, very little has changed. But you can still see 1, 2, 3, 4. 5 is still owed. That wave 5 still has to be placed. And that's when it'll take into the mid-May time frame, I think. All right, I hope you find this helpful. Have a great day.